The world's second largest economy faltering. China wants to give its economy a boost. That is why they did the devaluation. There are numerous consequences, though, intended and unintended. Our next guest has been doing business in China for decades. Jim Rickards, author of Currency Wars, The Making of the Next Global Crisis, is with me now. Jim, I'm going to start right away with the book. There is the cover. It's a fabulous read. But what does this mean for other Asian economies? Let's just start there, and then we'll move west.
Well, remember how this started. Everyone else in the world except China and the U.S. was devaluing. So Malaysia, Japan, Korea, Indonesia, all in their own way had devalued the currencies. Now, I was watching the China-U.S. peg. It was fascinating because you have the two largest economies in the world, 30% of global GDP. They were pegged. And I said, gee, we're halfway back to the old Bretton Woods system. Well, so much for that. China broke the peg. People say this is a currency war. This currency war has been going on since 2010. I think it'll go on for another 10 years unless the system collapses, which is usually what happens. So this is going to go on for a long time.
Okay, so someone sent me a note this morning and said, oh my God, this looks like 1998 when long-term capital blew up. And that was really the first crisis that a lot of traders who are still working on Wall Street had to deal with. Does this look more scary or less scary than that?
Well, you know, I was general counsel of long-term capital. I negotiated that bailout, so I had a front row seat on that one. It does have that kind of feel to it because, remember, LTCM came to a head in 1998, but that crisis started in June 97 in Thailand. It took over a year to go around the world, so these things don't happen overnight. So this could be that sort of, as I call it, the snowflake that starts the avalanche, but it could be a slow-motion avalanche. It could take a year to fully play out.
So I want to ask you, Jim, and we just alluded to it with the market strategist, but the idea of the Fed, I mean, the Fed was already concerned about the strong dollar. China devaluing the yuan makes the dollar even stronger in principle. So what does this do to us?
Well, Deirdre, you know, I said in 2014 that the Fed would not be able to raise rates at any time in 2015. And Wall Street said March, then they said June, now they're saying September, now we're hearing December. Forget it, till 2016, maybe 2017. But the thing is, the Fed, I wrote an article the other day, I said the Fed wasn't going to raise rates before China devalued the yuan. Atlanta GDP tracker showing GDP about 1% for the third quarter. Now, we're halfway through the third quarter. That could change, but 1%. First quarter was 0.6. Second quarter was 2.3. Put it all together, you've got about 1.4% growth for this. It looks like the worst year since 2012. So we're in bad shape anyway. This is just the last nail in the coffin. The Fed can't raise rates.
All right. So, Jim, of this news, when you read this headline, China devalues as a China hand, what popped into your head?
Well, you know, with China, there's always a lot behind the curtain. This is like a Beijing opera, as they say. But the bigger play is that China wants the yuan to join the SDR. That's the world money that's printed by the IMF. It looks like that was teed up for November, but last week the IMF
they just blew it, though, right? Basically.
Well, I think they're going to get there, but the IMF pushed it back 9 months to September 2016. So China said, look, we can have a strong currency for 90 days to join the club. But once the IMF pushed the membership deadline back, China said, hey, we can be good next year. We'll be bad this year. We're going to cut. So in other words, when the IMF gave them the extension, that was a green light to cut the currency.
Okay, green light to cut the currency. And for those who don't know, the SDR, this is basically the stamp of authentication. Okay, China and yuan, you can be a reserve currency equal to the dollar. So China wanted that power.
That's right. It's a prestige thing. It's now teed up for the G20. You know, G20 has a rotating presidency. Next year is China. So it's going to be November 2016. Xi Jinping is going to be king of the world, in effect, president of the G20. So they'll let China into the SDR just before that. So that's their seal of approval.
All right, seal of approval. Jim Rickards, so glad you are here today to lend us your expertise. Thank you so much. Jim Rickards joining me there. He is the author of Currency Wars.